These targets came from one clean power of 3 setup, and in the next few minutes, I'll show you exactly how power of 3 actually works. So first, power of 3 is a three-phase price cycle where the market accumulates, manipulates, and then distributes, all using the opening price as the anchor for directional expansion. Let's look at a bearish example. Here, price first accumulates, then it manipulates higher, pushing above the daily open, and finally it distributes lower. On the daily candle, it looks like this. The candle opens, gets pushed up to take liquidity, and then delivers lower. Now for a bullish bias, it's the same structure. Price accumulates, then it manipulates lower, dipping below the daily open, and finally it distributes higher. On the daily candle, it looks like this. The candle opens, gets pushed down to create the manipulation low, and then delivers higher. Now let's hop onto the charts quickly. Here on the 4-hour time frame, we're inside a bullish fair value gap. Dropping down to 1 hour, we see a sell-side liquidity sweep, which simply means our bias is bullish. Now on the 15-minute chart, look closely. This is the midnight candle, the new day open, use New York local time. Let's mark its opening price. This becomes the daily open. We'll wait for price to accumulate, then manipulate below the open because our bias is bullish. Here's our accumulation range. Price dips below it. That's our manipulation. And there it is, a bullish change in the state of delivery. We enter here, place the stop below the fair value gap, and target the accumulation high. Clean target, simple setup. Moving to the next day, we mark the midnight candle opening, price as the daily open. Price accumulates above the daily open. See this? That's our accumulation range. Price goes below the range and daily open. That's the manipulation. Now we spot an inverse fair value gap. Enter here, stop at the low, target the previous day high. Huge upside move, clean target. Stay with me. I'll show you exactly why most traders fail and lose money, even while using the power of 3. Now I'll show you exactly why ICT traders lose money using this concept. We're inside a daily fair value gap and also have a daily sell-side liquidity sweep. Drop to the 15-minute chart. First, mark the midnight candle open as the daily open. Here's our accumulation range. All the structure from the previous day low is real accumulation. Here's the common mistake. Many traders see these sideways candles and think this is the accumulation and that the first dip below it is the manipulation. They enter too early, expecting a distribution, but price drops below the real accumulation range, stops them out, and the cycle repeats until the true manipulation happens. Now we have real confirmation. We enter here, stop at the low, target the previous day high. Clean setup, huge upside, simple target. So, like I showed you, this is the mistake you have to keep in mind. Patience is key when spotting this setup. It's really simple. You just have to consider the whole accumulation range from the previous structure into the new date open. Let it get manipulated and then position yourself. When you do this, you'll consistently spot high-quality setups and avoid the common mistakes that trap most traders. So, if you want to stay ahead in the markets and never miss a move, you can join my Telegram and Discord servers. There, you'll get daily market overviews, access to a supportive trading community, and all the insights I share with my students. And if you're looking for one-on-one mentorship, you can check the link or simply drop me a message, and I'll personally guide you through the setups, the psychology, and everything you need to trade with confidence.